The fact that you're here means that you have been thinking about investing in stocks, or you invested in stocks already and you're wondering if it is for you. The truth is, while anyone can invest in stocks and you can start your investment journey with very little, investing in stocks is not for everyone. As you may be aware, investing in stocks means buying shares in a public company. When you invest in stocks, you profit from the growth and successful performance of the company. The better the company performs, the more value the stock has to you. This means you could earn a profit from sale or get higher dividends. But it is also important to know that if you invest in a failing company, you can end up on the losing end. So before you go down that road, you want to know if this venture is really for you. Before you take the step and start investing, you must know which stock market you're going to do your investments with, if not more than one. This will greatly affect how lucrative the venture is, and depending on your geographical location, you may not have access to all stock markets. Next, you will need to decide how you're going to do the investment and what type of trader you want to be. Have a strategy in mind and try to stick with it. Continuously switching strategies can lead to a tremendous loss. There are several types of traders. Day traders, which are not necessarily considered as investors in the traditional sense, they buy and sell stocks within a day or even within seconds. Swing traders hold stocks for more than a day and minimize some of the risks associated with day trading. You can opt to be a position trader, which is recommended for beginners. Position traders hold stocks for months and can hold stocks for longer by understanding the price temperament and technical trends. You can choose to be a short, medium, or long-term trader. Short-term trading is when trading is done within a day to a few weeks and produces significant outcomes. Medium-term trading allows you to hold stocks for months, while long-term trading, on the other hand, allows for holding stocks for years. Profit is gained with the growth in dividends, bonuses, and the elaboration of the company. Trading can also be done online or offline depending on what suits you and the strategy you're thinking about using. With offline trading, you would place your orders through a broker who buys or sells stocks on your behalf. With online trading, you can place orders on your own. Another important thing to consider when you are going to decide if investing in stocks is for you is whether you will be investing in stock mutual funds or individual stocks. It's important to note that this may vary from market to market. Stock mutual funds, also called equity mutual funds, allows you to buy tiny portions of several different stocks in one transaction. Investing in a fund lets you own tiny pieces of each of the respective companies. You can put numerous funds together to build a diverse portfolio. On the other hand, you can purchase stocks or shares in a specific company. You can still build a diverse portfolio out of many individual stocks, but it takes significant investment and research. Purchasing individual stocks can provide more returns, but it poses more risk. If you enjoyed the video so far, remember to like and subscribe. Stock mutual funds are inherently diverse, which reduces your risk, but mutual funds tend not to rise dramatically like some individual stocks might. As you look to invest in stocks, it will be imperative that you know the reason you want to invest and how much you are planning to invest. The reason you invest may be to generate money for retirement or to create additional sources of income. It will be important to keep this in mind as it will affect your decision in the future. How much you are willing to invest will aid in determining how you should approach investing in the stocks. Investing small amounts makes it harder for investors to have a diverse portfolio. Diversification involves spreading your money around. The less money you have, the harder it is to spread. Investing in stocks is great for many beginners, but the active trading of stocks is not recommended, which involves dedication and a great deal of stock research. A buy and hold strategy is generally a better choice for beginners. Investing in the stock market is a long game. A general rule of thumb is to have a diverse investment portfolio and stay invested, even when the market has ups and downs. There are a few qualities or characteristics that every successful investor has. 1. You must be risk tolerant. Whether it may be aggressive, moderate, or conservative, you must be willing to take some form of risk. You must have a high level of patience, knowing that you may have to hold stocks for years to reap the high benefits, or knowing that stocks may not have moved at the same pace you want it to. You must be decisive, as investing in stocks may require you to make very fast decisions, as sometimes seconds can determine whether or not you make money or lose money. If you will be buying and selling stocks on your own, it will be very important that you are a person that keep up to date with current news, especially as it relates to the companies you choose to invest with. Keep your emotions in check. If you're going to buy and hold stocks, you will see several times where the value of your stocks will fall, and this can send you into depression. But the fact that the value of your stock falls doesn't mean it won't go back up, and it can still be very profitable in the long run. If you enjoyed this video, don't keep it to yourself, share it with a friend. Like, comment and subscribe for more videos.